Once you can begin to internalize that way of thinking, now you're thinking like a real estate investor.
If you're investing, investors will.
The podcast for all things real estate investing.
So, welcome back to another episode of Investor One on One. Today's guest is a best-selling author, real estate analyst, and educator who has been helping investors make smarter decisions for decades. He's the founder of RealData, a leading real estate analysis software company, and the author of several influential books, including What Every Real Estate Investor Needs to Know About Cash Flow and Mastering Real Estate Investment. His work has guided thousands of investors in evaluating deals, understanding cash flow, and building profitable portfolios. So please welcome to the show, Frank Gallinelli.
Well, thank you for having me. It's a pleasure to be joining you here this morning.
Thank you for hopping on, Frank. So, yeah, let's just start off with how did you first get into the industry and how did you evolve from providing real estate analysis software to becoming an author and educator?
Well, in terms of the analysis software, I originally just developed an analysis model for my own use as an investor. This goes back more years than I probably ought to be willing to admit when personal computers were literally just coming out, becoming available to the public. And I was involved in a deal where I wanted to try to figure out the appropriate price to pay for a particular piece of commercial property. Now, I had been the commercial sales manager for a real estate company up here in Connecticut, and I learned the analysis approach from my owner broker there, who was a CCIM, actually one of the originators, I think, of the CCIM program. And so he taught me how to do investment analysis. And now I discovered this strange piece of equipment called a personal computer, which also had a thing called a spreadsheet that you could buy to try to use. So let me see if I can duplicate what I did with paper and pencil on this spreadsheety thing. So I did. And I analyzed that particular piece of property. And some colleagues of mine saw it and said, how'd you do that exactly, man? Can we do that? I said, sure. A software company was born. So I started selling these little models. This was before Excel even existed. It was something called, I think, SuperCalc back then, and then Multiplan by Microsoft back then. And but eventually Excel came out. We were one of the first beta testers for Excel on the Macintosh because it came out initially on the Mac, not on Windows. And so that's how I started selling little Excel models or multiplan models to colleagues of mine, and that was a software business. Now, the software business is how I kind of morphed into the educational part of my mission, if you want to call it a mission, because after a few years of selling the software, kind of noticed that people were when they were calling up and wanted some kind of help, some kind of support. You would think with a software company they were calling up and saying, which key do I press to make this happen, or where's the menu that does this and whatnot. But instead they were calling up with conceptual questions. They were calling up to say, why is my IRR so high or so low? And why aren't you counting mortgage interest when you calculate the net operating income? Questions like that. So I realized at that point there were an awful lot of people on this planet who were, playing around with a lot of cash, sometimes not even their own cash, millions of dollars, and they didn't really fully understand the kind of analysis they were doing. They didn't understand the metrics. They didn't understand the results of their attempts with our software, their attempts to evaluate a property. So I said, well, I think maybe I ought to do a little something about that. It might be a self-serving solution, actually, because the more people would understand how an analysis works and what an analysis means, what the results of an analysis mean, well, the more motivated they would be to buy our software. So that's how I got into writing articles initially that would be beneficial, I hoped, to real estate investors. Articles, this is before anybody called articles blogs. We were early adopters of the internet too. We had our website out in the late 90s. And so that's where I published some of these articles. And the articles kind of launched me off into the educational aspects of my career.
That's awesome. And talking about educational, a lot of investors watching this right now know you by your books. What led you to write? What was the inspiration behind that? Especially in the books, like what every real estate investor needs to know about cash flow. And why do you think it
Yeah.
became a bestseller?
Well, it's a funny story as to how it became a book in the first place. I was minding my own business, and one day the phone on my desk rang, and I picked it up, and it was an editor from McGraw-Hill. Now, I knew absolutely nothing. Probably don't know a whole lot more even now, but I knew absolutely nothing about book publishing. And I didn't realize the level of gratitude that you were supposed to express when somebody calls from the gazillionth floor on Sixth Avenue in New York and says he thinks maybe you ought to write a book that they could publish. So I gave the guy a hard time. All right. I, but eventually, I did agree to send him a sample chapter or two, and they then agreed to publish it. The rest, as they say, is indeed history because now the book is in its third edition. Um, it's uh, they originally were hoping that they might sell 5,000 copies of it, and not to break my arm patting myself here on the back, but I've been keeping track of my author statements, my royalty statements over the years here. I think they've almost hit something like 180,000,
Wow.
including the ebook versions that came out later and so on. So I think it would be safe to say that both their expectations and mine were exceeded by a whole lot. And so I think your question about, so why did it sell? Uh, One of my subsequent editors, by the way, said you're only as good as your last book, and she was very much on point with that because my subsequent books didn't sell anywhere near those numbers. But the first one, apparently, I hit the sweet spot somehow in writing that one. And I think the reason was because, one of the things I tried to do was to avoid the typical bogus guru speak, oh, you can get rich even if you have no cash, even if you have no free time, just follow my magic recipe and and you'll be a gazillionaire. Yeah, I didn't want to write that kind of a book because I figured, well, there are probably about 400 of those already out there anyway, and can just that's just not my style. It's just not my thing. I wanted to make it a credible, rational approach to evaluating potential income property investments, and I wanted to do it showing how a seasoned investor would do it, and it was a metrics based approach. I mean, they came up with this title to the book. The rest of it, besides whatever a real estate investor needs to know about cash flow, it's and 36 other key investment metrics. Or can't even remember the name of my own book. They made it so long, the title. But uh, I wanted to make it accessible to people who might be otherwise discouraged with the idea that, oh, maybe there's going to be some math involved here, because the math really, spoiler alert, the math is really not all that difficult. The math is not that complicated. You just need to know what math you need to do, what metrics you need to calculate. And so that's what I tried to do with the book, to show it in an approachable, readable, even sometimes entertaining way, so that people who were, perfectly able to do this sort of thing, but simply didn't have any experience with real estate, could get from this book the kind of information they need to take it and run with it and make the investments and analyze investments, evaluate potential properties, and to pick up on what might be the upsides and the downsides of a particular property. So apparently, in aiming for that, I apparently achieved a degree of success, and the book then achieved more success than I was really expecting.
That's amazing. And for anyone that hasn't read it yet, what's one thing that you would say that this book offers?
What it does is it assures people that they can, in fact, look at real estate investments, look at income property investments, and look at them in a rational, credible sort of way so that they can evaluate them. They learn the vocabulary, they learn the language, if you will, of real estate investing, which of course gives them a level of credibility as they begin to try to get into this industry. When you're talking to other investors, when you're talking to brokers, when you're talking to mortgage lenders, if you understand the language of real estate investing, it's no different from other industries, other businesses, other professions. Everybody has their own secret handshakes, the names of things that really matter, the vocabulary that really matters. You understand the vocabulary and the underlying metrics that go with that vocabulary, and you're out of the gate with a good running start.
Amazing. So as we said, this book brought you a lot of success. How did your work with books and software lead to teaching at Columbia Graduate School and collaborating with the University of Alabama's Center for Real Estate?
Well, those two events actually occurred about 20, 25 years apart. Nonetheless, they were remarkably similar in how they came about. Now, with the Columbia Grad School uh, uh, involvement, someone who had read a couple of my articles, which were really kind of the precursors to the book, contacted me just almost exactly at the time that the book was headed out the door from the publisher. And he said he knew the director of the Master of Science in Real Estate Development program at Columbia, and he wanted to put us together because he thought that the kind of material that I was teaching would be good in that program. Now, serendipitously enough, where does this fellow live? He lives about 3 blocks away from where my first real estate investment in New Haven, Connecticut happened to be, which I lived in when we first bought it, and which I still owned. So we were able to split the difference in distance and meet maybe a block and a half away at a neighborhood restaurant to get acquainted. And so he picked up on my approach to education and investment analysis education, and he said, "Okay, let's give this a shot." So we did, and that was the beginning of about a 14-year involvement with that program. I started off being the instructor on the first day of classes, giving them kind of real estate finance's greatest hits in a 7-hour lecture. And I did that for a little while. And then they decided they wanted me to teach a kind of a more full-blown half semester course, which I began with I'd say about 8 students initially. But then kind of word spread around. By the time I was done, after about 14 years of doing this, I decided I really didn't want to ride Metro North into the city to do this uh, anymore. It was a required course for the entire program. So I had about 130, 140 students instead of 8. But I really enjoyed doing that. I really enjoyed the engagement with the students. The students were great. Uh, and that was really a lot of fun for me. But as I said, it was kind of getting involved with them was kind of very similar to how I got involved with Alabama 20, 25 years later. When my book first came out, I got a review from a fellow down in Alabama who at the time, I guess, was the director of the Alabama Center for Real Estate. I didn't even know that. But he liked my book, gave it a very positive review. He and I became acquainted virtually online. He wrote a very good book also on real estate investing, a dictionary of terms, actually. And I wrote a review for his book. And his wife, his name was Bill Evans. His wife, Denise, was also involved in commercial real estate. She was a CCIM, and she was also involved in real estate education. So we all became kind of acquainted. And some 20, and I would, communicate with them back and forth, periodically over the years. But then about a year or so ago, I had just got in touch with her, and she wanted to introduce me to the current director of the Alabama for Center Real Estate. And he liked my stuff, and he then recommended my online video course with special student pricing to their entire 800 real estate students at the university there. So we went from the book kind of leading up to a deal in Colombia to the book leading up to a deal in Alabama 20 years later. So talk about serendipity.
That's amazing. I love how little things lead to big things. And,
Yeah.
you've done so much in your career. If you had to choose a quote or a phrase or something that you've, taught your students over the years, what would that be to share that you can share with our investors?
Ah, okay. Yes. Um, I think most of my students, one of the first things I would say to them in my regular class was that I think I would ask them, does anybody here own a home? And a few people, they were grad students, so they were not just out of high school. So a few would always raise their hands, and I would say, well, I've got bad news for you. Everything you thought you knew about real estate because of your experience in buying a home, you're going to have to forget because it runs contrary to what I'm going to teach you about investment property. Because what you need to know about investment property is that you are not really buying that package of bricks and boards and BX cables and plumbing fixtures and all the rest. No, you're buying an income stream. You're an investor and you're investing in an income stream. And once you internalize that, and I can tell you right now, it's not always that easy to internalize. You have a tendency to backslide into the homeowner, you know, mindset, the real estate mindset. Home, but you've got to really kind of latch on to that notion that what you are buying is an income stream. And once you really do that, then we can move forward with understanding how to evaluate income property, how to look for the upsides, how to be aware of the possible downsides. But they may be different. When you look at a home to purchase, you're thinking in terms of comparable sales. When you think of what is this home worth? If my house is in a neighborhood where, it's four-bedroom colonials and they're all selling for $500,000, give or take, 5 or 10%, then this home is probably worth $500,000. Well, fine. That makes perfectly good sense. But let's say I would give as an example, let's say that you've got two virtually identical small office buildings that are literally physically next door to each other, not even one of them being on a corner having a different, kind of exposure. They're in the middle of the block, next door to each other. They're identical. They were built by the same contractor, designed by the same architect, same number of square feet. Everything about them is the same except for the leases. One of them is leased up at normal market rates, and the other one, I don't know what that guy was thinking when he rented this place out, but he rented it out long term at below market rents. Are these two buildings worth the same to an investor? No, they're not. Physically identical, but the income streams from these two properties is totally different, and therefore their values are totally different. Once you can begin to internalize that way of thinking, now you're thinking like a real estate investor.
That's some great tips. And, for these investors that you talk to, what are the most common mistakes that investors these days are making when evaluating deals?
Well, I would say the the biggest one, the biggest mistake that new investors make is not stepping back, a step or two and asking themselves, why am I investing? What's my purpose? What's my goal? Okay? Because depending upon the answer to that question, what you choose to purchase and on what terms can be completely different. Your goal may be long-term accumulation of wealth, in which case you're a buy and hold investor. Your goal might be that you want to build equity in property so that you have it for some use down the road. Could be to pay for kids' college educations, or it could be to pay for or to support your retirement. But maybe that's not your goal. Maybe your goal is a quick hit that you want to make money right away, in which case you might be looking at a fix and flip kind of investment. Or maybe your goal is I'm more interested in supplementing my employment income. And so I want a building that's going to be able to generate a strong, positive cash flow year after year. So, I think there's an old saying from Lewis Carroll that if you don't know where you're going, any road will get you there. Well, you got to know where you're going. You got to know where you're going because that will help you decide what kind of property you want to be looking at. And also, it will guide your analysis. You will look at the metrics that tell you more about the success that coincides, that meshes with your goals. So if you're a buy and hold, you're focusing on the IRR. If you're a cash flow investor, you're focusing on the cash flow. If you're a fix and flip, you're looking at the proceeds of sale over short term, which involves, of course, taking into account the costs of rehab and the costs of resale as well, which may be bundled into a very small period of time.
I couldn't agree more. And Frank, as the cash flow guy, how should investors approach analyzing cash flow to ensure they're making profitable decisions?
Well, cash flow is certainly one of the key metrics, but as I was saying, understanding your goals is essential to knowing how big a role cash flow plays in your decision. If you're doing a fix and flip, it probably doesn't apply at all. If you're doing a long-term hold, cash flow is nice, but it may be the home run at the end, the resale value that is more important to you. So cash flow is a key metric, but you have to understand that there are other metrics that also should uh, grab your attention. Debt coverage ratio is another one. Your ability to cover your debt with a good deal of slack, a good deal of extra room. The internal rate of return, which of course is the metric that I think will give you the most information about a long-term hold. So cash flow is important. One of the key things, especially for a relatively new investor, is make sensible, reasonable projections of your cash flow, especially in the first couple of years of holding, because you want to make sure that it's going to be a positive cash flow. Because, a negative cash flow is not just a red number on a spreadsheet. A negative cash flow is money directly out of your pocket. There is no such thing as in banking as a negative cash flow, a negative bank account. If you don't have enough money to pay the mortgage or pay the taxes, coming from your property, it's going to have to come out of your own savings, out of your own pocket. So it's important to make realistic projections of cash flows, especially for the early years of holding a property, so that you know really what you're getting into.
And Frank, you've been in the game for a while now, and I've seen the market change in many ways. What major trends do you see shaping the real estate industry over the next few years? And where do you think the market is heading?
You know what? If I were to answer that question, I'd be guaranteed that the opposite would happen because projections about where the market is going are a path to self-destruction. I mean, take into account the projections of what was going to happen immediately with the imposition of these tariffs that we've been watching on the news and all the rest of it. You know, every good economist in the world had an opinion, and probably half of those opinions have turned out to be incorrect. So I don't think that real estate is going away anywhere, certainly, but I think any kind of a really focused projection would probably not do anyone any benefit. On the one, I'll qualify that just in one little bit, and that is given the likely arc with interest rates, it seems to be more likely that in the future interest rates will be declining rather than increasing. If that's true, then commercial real estate will probably be on the benefiting side of that arc. But to make a projection beyond that, I think would probably ruin what's left of my reputation.
How long have you been in the industry?
Uh, I think I could trace my way back to the early 1970s. My software company was founded in 1981. We released our first software in 1982. So I think I'm, I may be past my sell-by date at this point. But we've been around for a whole long time. So we've seen a number of things. We've been through more than a few recessions, more than a few loops in the interest rate cycle. When we bought a home that I'm living in now, which goes back 40 some odd years, shortly after I bought it, mortgage rates were up in the teens. I think they might have hit something like 16 or
Wow.
18%, which is a mind-boggling number even to think about now. So seen a whole lot.
You
A good deal of water has gone over the dam here.
you haven't, and do you see a familiar pattern over the last 40 years? Or it's
Yeah.
always very
It's
different?
yeah, it's you can never tell what's uh, coming down the pike. Who was it? Satchel Paige, the famous uh, 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 baseball pitcher who said, don't look over your shoulder. You might see who's gaining on you, but that's uh, that's it. Look forward. If you look back and try to make the past as some kind of a guide to the future, you'll probably get it wrong.
And for investors that are listening right now, do you have any resources or skills that real estate investors need today to succeed in real estate?
Well, again, if I may make a lapse into a self-serving observation, one of the reasons I took the material that I taught at Columbia and launched it into a online video course, an on-demand video course, was because I really still strongly felt that education was the necessary first step for success in real estate. So that is certainly you can find that you can go to learn.realdata.com or learn.realdata.com/courses, and you'll find out more about that. But I truly believe that that kind of education is a necessary first step. And of course, there's our software also as a resource because if you're going to be doing these kinds of analyses of property, even if you read my books, take my courses, and learn how to do all the math yourself, it doesn't necessarily make sense for you to invest in the amount of time that it would require to do a 15, 20-year projection of the future cash flows and tax consequences or resale possibilities, rate of return metrics, and design the reports. So why don't you know, get the tools that will do it for you? Uh, so at realdata.com, you'll find our investment analysis software, which I think will be the kind of thing that most investors find useful.
For sure. And Frank, something I like asking investors, if you had to restart your whole career today in real estate investing and you only had $5,000 and only your wisdom, what would your first step be?
Well, it might be the same thing I actually did. And I wrote a blog post about the kind of the BRRRR idea. Uh, when I first got into real estate, it wasn't because I planned to get into real estate. It's because my wife and I were both teachers. When I got out of Yale, my first job was teaching in New Haven. But then she lost her job because she was expecting her first child. Now all of a sudden we find ourselves with half of our already modest income and couldn't afford to pay the mortgage on our little Cape Cod house with a mortgage with something like $170 a month or whatever. So I was introduced to a fellow who had a very nice three-family house in New Haven that I could buy, live in, and collect rents. So a fairly modest down payment, I was able to get into that house, occupy that house, and have it pay the full cost of occupancy for me. Pay the mortgage, pay the taxes, pay the insurance, and increase in value over time. And I still own that house. We've thought many times about perhaps even going back into and living in it. But it was a great way to get on the job training in real estate because now I had to learn how to be a landlord because I was a landlord and I had tenants living right above me. And that was a kind of an unplanned career move, but fortunately, it seems to have worked out.
And to conclude this amazing conversation, what's next for you on a personal level and what's next for you on a business level?
Uh, uh, I'm on a personal level, I'm keeping on. Uh, we live in a house that's probably way too big for us, like we're like two marbles in a bathtub, but uh, probably not sufficiently motivated to make a change. So I think we're going to be staying here. On a professional level, I continue. We continue to operate the software company. I do have a gentleman up in New Hampshire who takes care of most of or virtually all of the customer service and infrastructure on the software and on the website. I continue personally to continue to promote the educational materials with ongoing blog posts, podcasts such as this, and working with the students at university. There are other universities besides Alabama that I've been engaged with and providing some of this resource material for the students there, and I enjoy that. It's my way of still staying involved with the with college students and the education of these students who are thinking career-wise about getting into real estate, but it doesn't quite require the same degree of intensity that I had to apply to, to teaching live in person and doing grades as I did with Columbia. So that's a good way for me, I think, to continue forward with my business activities.
Frank, you're amazing. Thank you so much for sharing your story and wisdom with us today. It's been a pleasure having you on Investor One-on-One. If our listeners want to connect with you, learn more about you, what's the best way to find you?
You can find me on LinkedIn. I think my handle is Frank Gallinelli or F Gallinelli, one or the other. But LinkedIn is a good place to find me, and I welcome anyone connecting with me there.
Awesome. And to everyone watching and listening, thank you for tuning in. Stay connected for more interviews with the nation's top investors and industry leaders. Thank you, Frank.
Thank you for having me, Art.